Howdy, folks. It is Dr. Jeff Camarda. It's Friday, August 14th, and the market report will be relatively brief. There's not a whole lot that's changed. A couple items that you may be concerned about, and then I've got an update on our investment and trading methodology that you definitely want to think about. So the first is the market remains relatively flat. There hasn't been a lot of activities bouncing around, some rotation and so forth, but really not much has changed despite the fact that the world situation, if anything, looks a little bit gloomier. The tensions with China, an extremely important and conflicted trading partner, but trade relations continued, all relations continued to deteriorate, and there were some trade talks scheduled to occur over the weekend, which have been indefinitely canceled. Certainly not a good sign. China itself, while doing better relatively than most economies, is still lagging quite a bit. And its economy is not doing nearly as well. This also could have a huge impact on some tech darlings like Apple, especially with some of the trade restrictions and tit for tats that are going on. So be aware of that. And the other item that I wanted to mention is it appears that inflation. Remember that the one reason, or the only sensible reason that's given for the continued effervescence of the stock market is that you can't fight the Fed. The Fed is going to do whatever it takes, and obviously they can't. Their arsenal is not unlimited, and they pretty much, in my view, shot their wad. But they're printing money around the clock, which is it's paper, right? It's just kind of it's notional accounting. It doesn't. You're not creating any value by attempting to lower interest rates and get free money. But the short of it is this is an extremely inflationary practice. And while inflation has been at bay for a long time, there are recent signs inflation is kindling and could be quite fierce going forward. Again, not a good sign for the economy. Those of you that remember back to the stagflation days of the 1970s, and stagflation referred to the fact high inflation, prices kept going up, but the economy was stagnant. Wasn't a really good time. It was actually a rather vicious and extended bear market back in the 70s. Not that I'm predicting that now, but just of historical interest. Anyway, enough of my gloomy market update. But I do want to read this message that should be emailed or mailed to you relatively soon. And sorry about the glare on the glasses. As you probably know from watching my regular videos, we have significant concerns about current market valuations and the risk of a sharp downturn, given the very poor worldwide economic conditions produced by the terrible COVID virus. Our concern is elevated by civic unrest in the United States and a presidential election year that's really marked by extreme divisiveness and an unusual and highly uncertain electoral process spawned by the pandemic. Who knows what's going to happen with the mail voting and so forth. There's a lot of, dark directions that could go in. Back to the script. As a proactive measure, we've gone to large target cash positions in all managed portfolios. We fear the market may be in an overvalued bubble with significant risk of a big drop. And I think that's, I'm in the minority camp of, I'm not the only one that's saying that, but you certainly don't see that on CNBC. As protective measure, I already read that, sorry. In the current economic climate, we do not think it prudent to be as fully deployed into longer-term equity strategies as has been our practice in the past. That said, we do believe there are opportunities to target profit by using shorter-term, more tactical strategies. And while such strategies may not, in fact, aren't very tax efficient for those in taxable accounts, and that won't impact many of you given the tax accounting that's occurred so far this year, we do believe they offer the opportunity to improve performance in a highly uncertain period. And that's our objective, is to juice performance without shooting the wad and making some maybe some imprudent allocations in this very dangerous time. So these strategies will include sometimes frequent trades designed by our portfolio board, as well as allocations to technical and alternative funds managed by others, but selected and overseen and at times replaced by us. Potential asset class exposure will include, but not be limited to, traditional equities and fixed income, as well as so-called alternative classes such as currencies, commodities, and others. We expect to begin implementing these strategies across all Camarda AIMS and Caesar portfolios about now. We're about the middle of August, and we expect this to begin happening next week, actually. For accounts that are too small to effectively use our board-driven trading, allocations to alternatives, technical and alternative funds will be substituted for such trading. Why too small? Because if we want to put 5% of a portfolio, and that 5% is less than it costs for a share of stock, then that doesn't work too well. So we'll have to, have alternative measures for those. That won't affect many of your accounts, but some of them, or maybe some, you may one or two of your accounts if you have multiple accounts, and the smaller ones may be impacted. So over the coming weeks, we'll also be adjusting the allocation architecture for the AIMS portfolios into more of a core and satellite approach, and to look to exit positions in sectors that have done relatively well and replace them with sectors that we expect to do better. Was that Dante that just danced across my threshold? Who darkened my door? Deployment into these strategies will be automatic for clients that do not otherwise instruct us to not deploy. But if you do not wish deployment such as I have just described, please get on the phone, get on the email, let us know. Please immediately notify us. And Ashley, our compliance officer, will give you a mechanism early next week to do that officially. And again, we thank you very much for your continued confidence during this extremely difficult time. Rest assured, your financial security and prosperity is our very first concern. And I'm sorry, I wasn't laughing at that. I was working at the next sentence ahead that I'm about to share with you. Rest assured that your financial security and prosperity really is our very first concern, and that we're working diligently to optimize this for you, our dear and cherished clients. The other thing that I really wanted to add is, Kim has, my wife and partner, wonderful Kim Camarda, has operated kind of in my shadow over a long period of time, at least, and she hasn't certainly been the figurehead of the organization than I have, but she is very, very smart and effective in a number of financial disciplines, particularly technical analysis and making decisions based on charts and getting involved in more tactical trading. She's really, really very good. And many of you probably don't know that or haven't heard that from me. So she'll be doing a special video on Monday, I believe. Kim, you're officially doing a video on Monday, so be prepared. Her office is behind me there, behind that door. So look forward to that. I think you'll find it very educational and very reassuring and probably a lot of fun. She's a great personality. And with that, my dear and cherished clients, I think I will bid you adieu. Actually, what I was laughing about before when I took the glasses off, see how much better you could see me? I said that glare, my God, it was blinding even me. Thank goodness I can finally see. And that's it. Have a wonderful and safe, delightful weekend. We look forward to continuing updates next week. And again, thanks for all the email feedback about the videos, and hopefully that this more sedate pace is going to be a little bit more palatable to you. Thanks. Have a great weekend. Bye-bye.